With today's more import chart appraisals on Thursday the 4th of January with me, Rich, Japan market analyst at Hantec Markets. We've got a positive session again on these equities. A very strong move we saw yesterday on Wall Street. Let me show you the S&P 500, which continues to push, into all-time highs. Really strong session. Another session where it closed towards the high of the day. Really strong moves, and that's sort of been reflected in these European markets again, which are positive now. The DAX has again rebounded. Trading the DAX on a consistent basis on a trending move doesn't really seem to work. It seems to sort of be flying around within a range again. Certainly the recovery from Tuesday's low has been fairly impressive and continues to move back above 13,000 again, so that's a bit of a pivot mid-range, that point. And the interesting moves we've seen also is this dollar. Dollar looked to rebound yesterday, but it's lost traction in that recovery. Now you've got this head and shoulders top pattern on the dollar index, 92.50 to 92.75 is the resistance of that top pattern, and it didn't hasn't really yet unwound to that neckline resistance. I mean, there's a basis of a pullback in that rally we saw yesterday. We saw strong ISM data, ISM manufacturing data for the States, and also the Fed minutes, which sort of were pointing towards the fact that tax reform in the States is positive for growth, positive for the economy, but as yet we're still struggling to see inflation. But the sort of Fed minutes seem to be fairly hawkish, sort of looking for excuses to hike rates, and they are still on their tightening cycle. So positive moves there. We've also got the oil price, which is continuing to run higher. Really strong oil price. Multi-year highs on that oil price, back to levels not seen since May-June 2015, which it got to 62.60, so not a million miles off that point now, as the market continues to unwind this huge decline that we saw. But the oil price continues to recover, so strong moves there on oil, and we are continuing to see that today. In terms of the gold rally, it sort of stabilised a bit. It sort of got to 1305 in the correction back from 1321. It's just stabilised back to trading flat on the day now, so a little bit of a stabilisation there on gold. But generally speaking, equity markets were up. The dollar back down again, as you can see across all these, but the yen weak is even weaker than the dollar today. Now, in terms of what we've got on the data front, services PMIs this morning. China, look at that, Cajun services PMI 53.9 up from 51.9. That's positive, isn't it? And the Eurozone services composite PMI ticked higher, and on the services as well. But the composite PMI ticked high to 58.1. Now that is obviously a very strong number, and we also looked at a positive number on the UK services PMI 54.2, up from 53.8. That was also a bit of encouragement for the UK economy. Service sector is about 80% of the UK economy. This afternoon, bit of US data on the employment side. ADP employment is the private payrolls number that comes out before payrolls. Non-farm payrolls on Friday. 190,000, so sort of middle of the road there. Jobless claims again around 240,000. And then we're looking for the EIA inventories. Now we saw the API inventories yesterday showing around about 5 million barrels of drawdown of the crude. EIA looks to be the same today. Distillates of inventory build, minor inventory build on distillates again, and expected to be a gasoline inventory build as well. But that data could drive a bit of volatility through the oil price at the salvo. So my chart today is sterling yen. Now what we have seen in recent days is sterling yen drifting back to this uptrend. And yesterday's candle seemed to be a negative move and a bearish outside day. Sort of seemed to put the sort of market on a little bit of the back foot, but sterling has recovered some of those losses today, and the yen is a little bit weaker generally across the board today. So sterling yen picking up. Now this is interesting because it's around this 52.85 towards that 53.40 resistance, consistent resistance throughout the latter stages of 2017. Will the market break out above that? It's a big resistance, isn't it? And if it can break out above it, then that would be a decisive move to the upside in the recovery of sterling yen. But it certainly needs to continue to move higher. Now, the issue that I've got with this resistance in the chart is the fact that the resistance seems to continue to be met now with the RSI coming towards 60, which is basically where it is now. Look at those MACD lines. They're not exactly shouting from the rooftops that we're going to get a breakout either. Stochastics are positive though. And we have also held on to this uptrend this morning, so obviously the longer you hold on to that uptrend, that you're going to get a squeeze higher. Today's rebound is a positive move, clearly, for sterling yen. Now, little corrective moves seem to continue to be bought into. There was a little bit of a deterioration yesterday on the hourly RSI with a move below 30. That's not been seen since mid-December, but it didn't really hold that move. But it'd be interesting to see again as the market sort of comes towards 60 on the hourly RSI, if that starts to roll over. And the initial move, just zooming back in the last hour, was for a bit of a jump higher, but then to roll back. So yeah, it'd be interesting to see if the market can continue higher. Also look at these MACD lines, just unwound to neutral. Now that has, the RSI on the hourly has tended to be above neutral in the last few weeks, so it's sort of a little bit of a deterioration there. And do you sort of question whether this is a move that can continue if that hourly MACD lines, if those hourly MACD lines just continue to roll over? So yeah, this is an important rally now. It needs to hold the move higher and come to test that resistance again at 52.80, where that is the key level that has tended to be seen over recent months. So I wish you good luck in your trading today, and I will speak to you later. Thank you.